By the time you're watching this, it's probably 2020, and now, well, what happened? You wanted to make more money in 2019, you wanted to crush your financial goals, but things got in the way and they just couldn't happen. So don't let another year go by without having to take any action, because of course the first step is simply deciding. Now that you are ready and willing to take action and you are ready to take control of your finances, in this video we're going to be going over the top 5 best ways to invest your money in 2020. Figuring out where to invest your money could be a real challenge, and there's a lot of information overload in this digital age. People can get easily confused, distracted by gurus and so-called experts of what to invest in and where to put their money, that they end up just not doing anything with their money. Too much information could be extremely overwhelming, and you basically need a crash course or a basic guide of where to invest your money, so that way you get a solid grasp of investing. So when figuring out where to invest your money, it's best to start with the basics, and any financial advisor would definitely agree with that. It's simply a matter of determining what goals you want to reach and then figuring out where to invest your money to reach those goals. But what are you actually doing when you're investing? When you invest your money, you're basically buying a share of a company or a commodity with the hope that the value of that company or commodity will grow over time. This in turn will grow your money. And it's easy for people to forget that this is not a get-rich-quick scheme. It's essentially a way to actually grow your wealth that you already have over time, and the key word there is time. But the good news is that even though investing is a way to grow your wealth, you don't have to have a lot of money to get started. Compound interest dictates that you can turn even the smallest sums of money into massive fortunes over time, providing that you select the right investments. And if you haven't seen my video yet where I cover compound interest and how to actually become a millionaire over time, not a get-rich-quick scheme, something legit and real, you could see that video. The link will be down below in the description. So there's so many ways to invest your money. It could be digital, physical, on paper. It could be a share of a company. It could be a currency. There's so many different ways. But number one, the most common way to invest your money is definitely going to be the stock market. And with the roaring, booming market right now, crushing record after record every single day, and a downturn not looking like it's coming anytime soon. And by the way, I did a video on that as well, how the US actually avoided a recession for a whole decade, and whether or not we should expect a downturn this coming year in 2020. You can see that video down below where I talk about the recession down below. So the most common and arguably most beneficial way for an investor to invest their money is going to be the stock market. So when you buy a stock, you're actually buying a share or a portion of the company that you bought into. When the company profits, the stock that you might have bought into actually might pay a dividend, and they'll pay that dividend depending on how many shares that you own. And I did a video on that as well, how to make money with dividends. All these links will be down in the description down below. But a lot of companies and stocks don't pay dividends, and simply you're banking on the fact that the company, the value of the company will go up, in which case you will make more money because the shares that you own will become more valuable. So when the value of the company increases, so do your shares, in which case you could sell them for a higher price later down the road than you bought them for. Now, like with any investment comes risk, and you're going to want to do your research on what stocks you want to buy. And especially as a beginner, I'm going to recommend that you just stick to the big companies, the blue chips, if you can afford them. But luckily, there's fractional trading out there. So if you can't afford a whole entire share of a company, you should be able to buy just a fraction of it, depending on how much money that you have. So do your research and don't just listen to something that you saw on the news or saw some guy talking about. Just be sure that you're investing into something safe and you are planning to hold that for long term. And like anything, don't invest any money that you cannot afford to lose. But with 2020 coming, there's definitely going to be uncertainty. And if you are a risk-averse person and you're scared and fearful, then you might want to do something that's a little more of a safe route, in which case you might want to look into bonds. Bonds are basically loans that you'll give out to an entity like the government, and they don't fluctuate like the market does because they're not tied to market movements. There's a few different kinds of bonds out there. There's several different options, and there's also public and private bonds. Bonds can be issued by the Treasury Department, and these are public bonds that are essentially used to fund certain projects, and you're giving out money to the government in exchange that they'll be able to give you that money back at a certain rate in many years to come. Whereas private or corporate bonds, what you're basically doing is loaning out money to an actual company because they need that money to raise funds. Public bonds are generally considered more acceptable and more reliable, as it's very unlikely that the US will go bankrupt. The downside is that they'll most likely offer a lower rate of return than a private bond, but of course, they're more trustworthy and widespread. The good thing about bonds is that you know the rate of return before you buy, so it's less of a gamble. But of course, the downside is that if interest rates rise, then the overall value of your bond will drop. So while they are considered definitely less risky than stocks, they're far from risk-free, and you should do your research and make sure that you know what you're investing to and understand that this is specifically a long-term investment that you will not plan to sell for many, many years. Bonds are a great way to protect yourself from any uncertainty, and with 2020, there is no guarantee that there will be record after record every day like we're seeing right now, and the stock market can drop at any time. It's something that we have to understand. The third way to invest your money in 2020 is going to be mutual funds and ETFs. So rather than taking a massive risk and gamble and buying just one or two stocks and hoping you'll see a return on your cash from that, you can actually buy for a cheap price into a mutual fund, and what you're buying is actually a bundle of stocks. The stocks are chosen usually by a mutual fund manager that actually manages this fund. Mutual funds and ETFs are basically bundled investment packages. FINRA.org basically defines mutual funds as an open-end company. It states a mutual fund is an investment company that pools money from investors and invests it based on specific investment goals. ETFs are quite similar in that they have the same professional management and built-in diversity, but in contrast from mutual funds, they can actually be sold throughout the day and traded regularly like stock. Both mutual funds and ETFs are usually a combination of stocks, bonds, and other investments, and when you buy a share of this fund, you're investing in those things as well. So in short, this is basically a better and cheaper option of diversifying your portfolio without having to do much research yourself. Index funds have a great track record. There's so many different options out there, and almost every single platform will offer the option of you to invest in index funds and different kinds of ETFs. The only thing I do advise to watch out for is fees. A lot of these funds do have annual fees. In fact, all of them do. And so you're going to want to choose a low cost one that you won't have to pay a ton of money on what you're already paying for. Basically, this rate is kind of like a fee for their service of actually doing this for you. And so that's what you are paying for. And so you're going to want to find one that has a low rate of interest. I've talked about low cost S&P 500 index funds tons of times on this channel. I'll link some videos down below where I describe what I'm invested in. You can actually take a look at my portfolio, and you can just basically mirror me if you'd like. And the fourth best investment in 2020 might actually be a savings account. I've undermined savings accounts many times on this channel and denounced this narrative of the fact that you can get wealthy with saving your money. It's something that we were all fed when we were kids, that all you have to do is save your money, that's all we were told, and that's the path to wealth, and it's simply not true. But with all this uncertainty looming in 2020 coming up, and we don't know what the market's going to do after having a great year in 2019, it might be a good idea. Now, this is definitely the least riskiest way to do it, but it might be the worst way to do it. But when you have uncertainty and you are fearful of your money, you don't have a choice in the matter. When you put your money into a savings account, the bank will tell you how much interest you will return on that money annually, and typically that is a very, very low rate. Often most savings accounts now will offer less than 1%, and basically you let it sit there and collect money. As we know, low risk means low returns, and that's what you should expect with a savings account. It's no secret the risk to putting your money into a savings account is negligible, and with that comes almost no return. Still, savings accounts do play a role in investing. You shouldn't look at it as your all-time be-all goal, but it is something that you could definitely put your money in, and I definitely have some cash on the side. That's no problem. You can use this capital to purchase other investments, or in the case of emergency, you can use it so that way you don't have to actually pull out and touch your other investments. The problem comes in when you're living paycheck to paycheck and you are banking and hoping on the fact that this savings account will somehow magically spit out a large sum of money for you. You shouldn't even really look at it as an investment. You should really be looking at it as just a risk-free way to stack up your cash, stockpile it up, and so that way you don't have to touch it, or at least try to force yourself not to. And the fifth and final way to invest your money in 2020 is going to be through REITs. I did a whole video on REITs. Again, that video will be in the description down below. You can see that I go well into depth of REITs. I do own REITs, and they are a great investment option. REITs, or real estate investment trusts, are basically massive companies that have massive portfolios of real estate, and in return they collect rent, and they'll pay you a portion of their rent for being a shareholder. Some REITs actually do pay out every month. The REIT that I specifically hold does pay quarterly like a stock, and so that's how it can differ from regular stock dividends. Now, you shouldn't just throw all of your money into REITs. You should still diversify your portfolio with having some in stocks or funds or bonds, but also having a little bit of money in REITs as well is a great option to make some extra return. Right now, mortgage rates are super low, but if the real estate bubble were to burst again like we saw in 2008, that would definitely cause a downturn and you would see a significant loss in your money. It's important to take a look at the REIT's track record and see if they've been paying a dividend out every single month or quarterly at best. And you could take a look at their record from years ago to see how much of a percentage they've been paying to their shareholders. Is it consistent, and do they always pay on time? and is that rate something that you can rely on? Again, do your research and highlight companies that have a track record and a proven history, and also take a look at things that you might be able to see some value in and might grow over time significantly. When investing in REITs, you should have the mindset that you're going to be profiting off of these dividends, because a lot of times these REIT companies offer out very, very generous dividends that you could make some great returns on. But you should not be hoping that the value of the REIT company will go up a lot over time. A lot of these REIT companies will actually just fluctuate a little bit, but over time have pretty much stayed stagnant. This is because a lot of these REITs are very rent focused, and they'll take a profit of that rent and pay the rest of it to their shareholders. All these investment ideas are long-term investments. You should not be looking to make a massive sum of money within a short amount of time with these investments. If you're looking into taking a tremendous amount of risk and you're fine with taking that kind of thing, you can do your research on stock trading, but from experience, it is not something that you could make money from. In fact, most traders lose their money. But if you do want to play around with stock trading, or you just want to play around with investments before you put any of your real money into them, paper trading is a good option for you. There's many platforms out there. The one that comes to mind is Thinkorswim by TD Ameritrade, and they offer paper trading, so that way you could actually play with fake money and see if you can grow that yourself without actually having to risk any of your real capital. 2020 is upon us, and if you're not investing your money, you are losing money and missing out on money in the long term. And I hope you enjoyed that video. If you did, be sure to give it a big thumbs up, smash that like button. If you'd like to share this video with a friend, feel free to do so that way they know where to invest their money in the long term. And if you'd like to see more videos from my channel, I post videos every single week on business, finance, entrepreneurship, mindset, strategies, and tips and tricks from my own experience. You can feel free to hit that subscribe button. I post videos every single week. And if you'd like to be notified every time I make a new one so that you're first in line to see it before anyone else, feel free to hit that little notification bell as well so that we're notified every time I make a new one. See you in the next video.